Everyone, welcome back to the Renowned Leadership Podcast. Now, before we get started, I want to take a moment just to introduce you real quick to one of our newest tools that you have got to check out. As we all know, some form of remote work has become the new norm. Whether it's totally remote or some sort of hybrid model, companies are kind of being forced or pushed to adopt this new style of work. Leading a remote team presents completely new challenges, and it's pretty hard. And so it's important to have the right tools to be successful. Today, we're excited to share with you one of our latest resources. It's a simple 3-part checklist that's going to help you get started and help you lead your remote team more effectively. Remote work has unique challenges that require a different approach to your leadership. Without the face-to-face interaction, it can be difficult to build relationships and trust among your team members. Additionally, remote teams often have different communication needs and work styles that need to be accommodated. Effective remote team leadership requires a focus on communication, collaboration, and trust building. This 3-part checklist is all about communication, building trust in relationships, and ensuring that your remote team has the tools and resources they need to be successful. This includes access to technology and equipment, as well as training and support. Leading a remote team is the biggest leadership challenge today, but with the right tools and strategies, it can be done successfully. Our 3-part checklist is a great starting point for anyone leading a remote team. So simply go to our website, renownedleadership.com. That's RENOWNED leadership.com. Toss your email into the little box, and it's going to get delivered straight to your inbox for you to download and start using today. Thanks for listening. Now let's get started. All right, everybody. Before I introduce today's guest, I want to fill you in a little bit on what we got going on for the next 2.5 months with the Renowned Leadership Podcast. If you're tired of feeling like just another average employee in your workplace, you're just another average leader in your workplace, you're going to definitely want to tune in to what we have for you, as we're going to help you rise above the crowd and become that outstanding performer to become a hero in your workplace. So you're going to want to join us for the series, The Journey of the Workplace Hero. It's a podcast series dedicated to helping you transform yourself into the hero you need to be, that can induce change and really bring breakthroughs in communication, culture, all that stuff. In this series, we're going to cover topics such as leadership, communication, time management, culture, and we're going to have expert guests bringing their experience to help guide you through this journey. Okay, my friends, with all that being said, it is my honor to introduce our special guest, Colleen Lucero, a managerial accounting expert with extensive experience in helping large and small businesses make strategic financial decisions. If you're an entrepreneur, this episode is going to be crazy helpful for you, because in this episode of the Renowned Leadership Podcast, Colleen shares insights on how to use managerial accounting to drive financial stability and make informed decisions, such as loan applications and budgeting. She emphasizes the importance of understanding available resources and leveraging them to achieve success. Colleen also discusses the significance of having written mission statements, calculating your break-even points, and of course, your return on investment. So tune in to this episode to gain valuable knowledge and insights from Colleen's experience and expertise in managerial accounting for small businesses. I hope you guys are ready. Here we go. All right, Colleen, I am so excited, man. We are going to have so much fun. Are you ready to have fun?
I am. Let's do it.
That is fantastic because I love to talk about accounting. Like accounting is my go-to topic. Anytime I'm at like a dinner or an event, it's like, hey, I can't wait to find the accountants and we're going to talk shop about accounting. That is totally a lie. I'm actually taking accounting for in my an accounting course in my MBA, and it is not fun. I am not enjoying it at all. So I got mad respect for you accountants out there because, like, man, I don't know how you guys love your job. But go ahead and introduce yourself, Colleen, so everyone can get a grip on who you are and why exactly they should listen to you.
Yeah, definitely. So yep, I'm Colleen Lucero, and I'm a management accountant. I actually never thought I'd be a managerial accountant or an accountant at all, because I can very much relate to, like, this is not my thing. I don't see myself as a numbers person. But I actually got into it in a really weird kind of roundabout way. I thought I was going to do interpreting and translating. I love languages and storytelling. And I ended up working for a small business and wearing just like a number of different hats. And I worked with their accountant and started learning how to deal with their books. And I was like, this is why they must call them books, because like you can actually tell stories here. I could see like companies like ups and downs and their struggles and what they were going through and like how they were planning to tackle it. And that's why I ended up getting back into accounting. Interpreting wasn't quite the fit that I hoped it was, but I was like, oh my gosh, I can still do storytelling. And I do a lot of collaborative work with accounting. And so I work with a lot of teams of people, and that was what I wanted. So that's how I ended up getting into accounting. So I'm a little bit of a non-traditional accountant. I think most people, when they think of accounting, you think tax and audit. Those are mainly like the routes that people go. And so you're doing a lot of external reporting and like compliance and things like that. But then you have some little weirdos here and there that go into managerial accounting and then actually get some sort of specialty in tax planning and estate planning, and like they're kind of like little offshoots. So I'm one of those offshoots. I had somebody explain to me once where accounting has like 3 different areas but they're very similar, but they're basically like 3 different languages. So mine is like, it's like French, Spanish, and French and Spanish and Italian or something like that. So they're like 3 different areas of accounting where they're like similar and you can kind of understand one or the other, but not many people want to go off and do managerial accounting. Sometimes it's just not as familiar. Everyone knows CPAs, but not everybody knows what a CMA is, for a management accountant. So yeah, I can definitely relate to not necessarily enjoying the accounting topic. So I find it comical, and one of God's comical acts that I'm actually in the position I am. So I'm glad to be able to talk and help you guys understand a little bit more about management accounting and how it could be useful.
That's awesome, because you're absolutely right. Up until I met you, I had heard the terms, I guess, but I never really put 2 and 2 together. I always, anytime you'd say accountant, I would either take a tax accountant or a CPA. And
Yeah.
so I never really even had a thought. And even then, I still thought tax accountants were pretty much CPAs. They just knew a lot about taxes. So tell me what's the main role of a managerial accounting versus a CPA or a tax accountant or an estate accountant or something like that?
Yeah, I'd say so. Managerial accounting really gets into strategic decision making, and gets into storytelling a lot. I think that kind of is the broad brush. And because of that, we get into data analytics a little bit. We get into and how that relates to like operations. We get into my area, which is financial planning and analysis. So you're dealing with budget and forecasting and tying that to like a strategic plan. And you also get a little bit into performance management, because you're dealing with operations, which gets into some of the elements of HR and things like that. And then you also get into finance as well. So it covers a big broad brush, because really money touches everything in your business, and really management accounting is going in on the internal side. So most of the audit tax stuff is all external reporting for like compliance sake. Some sort of outside entity is asking you to do this. But the managerial accounting is all the inside decision making, and what you trying to gather all the information, make sense of it, and help you tell the story that you need to make that next strategic decision is really what it is. And that's why it touches so many different departments within your business. And they tend to be, managerial accountants tend to be kind of in the hub of a number of different teams because of that.
That's great because, and for me, it was, it actually made the process a little more, I don't want to say fun, but educational, I guess. And doing the research for this podcast, I love strategy. My military background, like anything strategic that involves being strategic is right up my alley, and I love things like that. So learning about managerial accounting for me for this podcast was actually not as horrible as I thought it was going to be. And I like to poke jokes at accountants, so I apologize. Don't take offense. But no, it's pretty fascinating. So what are the main metrics you'll use? Actually, before you answer that question, just to clarify, for the blonde people in the group like me, so pretty much like your main job is, I say, you know what, I'm ready to get a loan from a bank for $50 million to launch this expansion in California. And I come to Colleen, I say, this is what I want to do. This is how much it's going to cost me. And you go break down all the numbers to find out if it's good, if it's feasible, if it's wise, so on and so forth.
Yeah. Basically, whenever you're making a decision, like that, for example, it's part of the process. I wouldn't say it's like the whole thing that determines whether it's a good decision or bad decision or wise decision, but it's almost like you got to get the numbers in place just to determine your limits and your boundaries and that you're willing to work within. And that's where the managerial calculation piece comes in. So you're working a lot to establish where that is. But to really get those, a lot of times, like in that case, we might be doing some sort of scenario analysis. Like, what if I do this expansion? What if I choose something else? What happens? So you kind of pit certain scenarios up against each other. And that usually incites discussion, which is really the end goal a lot of times, is to incite discussion between whoever is or the stakeholders and whoever has a piece of that project moving it forward, so that you get more of a well-rounded view of what that decision is actually going to produce for you guys.
So that's
sometimes
that's
like
really,
even scenario. Oh, sorry, go ahead.
I was just going to say that's really interesting. So do you solely use financial metrics, or do you use things like predictive analytics also to help tell your financial story, basically, as you're talking to the CEOs and CFOs and all these C-suite execs that are trying to make their decisions?
Yeah, predictive analytics definitely gets into it. A lot of managerial accountants have even gotten strictly into business intelligence and data analytics. But yeah, so we often are working with the analytics team and integrating that into a lot of the reporting as well.
That's really fascinating, because I'm also taking a business analytics class.
Yep,
Oh,
definitely. Yeah,
so
forecasting, a lot of times you start using all these statistical measures, and a lot of times that's really within the warehouse of the business intelligence group. And so we're combining the two skill sets to help make a clearer picture.
that is good stuff. So how do managerial accountants work with, I mean, you kind of touched on this already, but how do you work with other departments outside of like the analytics department? Like, do you work with HR at all, or do you work with sales at all? Like, what all departments do you excel when it comes to working with them?
Yeah, I'd say it probably depends a bit on what that managerial accountant is doing, because they can be working with, like, my area is FP&A, so they can be working in an area like that. They could be doing operations more so. They could be doing a number of different things within the company itself. But like for my particular niche with FP&A, I'm typically working with an analytics team to some degree. Sometimes HR gets involved depending on what the decision is that we're making and how that involves the people and salaries and things of that nature, or positions, structures, things like that. And then we're also working, this FP&A team is typically working within the CFO suite to some extent, like run underneath the CFO. So we're working with that financial team as well. And because of that, we integrate with like the controller's office and things of that nature. With the controller's office would be more like the compliance piece of things. So we're integrating our forecasts with compliance and analytics and some of like the other leaders like business operations and maybe HR leaders as well, depending on what the decision is.
And so you take all the information from all these teams that you just named. And I'm just trying to wrap my head around this. So you take all this information and you use it just to basically paint a broad picture that can go down into a narrow picture that the C-suite's going to understand. That is your job. That is incredible. That is a cool job.
It is, and it's a large job. So like that's
usually
done on teams, like entire teams of people are working on that same thing. And so you're taking a piece of that and then trying to build it out as a team. And really the end goal is just to tie whatever your strategic plan is to what you're doing with your dollars and making sure that it's producing what you're expecting it to produce. But that simplified definition gets very complicated when you start layering in a bunch of different aspects and people involved, all of that.
That's incredible. And I never would have imagined, and I think most people don't imagine how many moving parts are behind a company's decision. We, especially as a worker, whenever it comes to, relocation or layoffs, unfortunately, or things like that, there are literally hundreds of moving parts behind the scenes of making that decision. It's not just, a CEO or a president of a company being like, oh, well, we're down 10%, we're laying off 20% of our employees. Like that's not exactly how that whole process works.
Right. Yeah. Not exactly. And I say that, and I think part of that depends on the company culture too, because I think it's becoming obviously more and more popular to make more data-based and more informed decisions based on past data and things like that. So that's becoming more and more of a stronger and stronger trend, which is why I think there's more of a demand for this like FP&A stuff and like stuff with data analytics and building out those teams. So yeah, that's becoming a greater factor in these decisions, where before you might have to do a gut check and be like, this is where we're going and this is the best way I know how to do it. But now we're actually trying to quantify that to make sure that it's reflecting and informing decisions, reflecting reality and informing decisions.
So when it comes to your accounting methods, what are some of the common cost accounting methods that you use? Well, first of all, what is cost accounting and cost management before you answer that question?
Yeah, so cost accounting and cost measurement is its own kind of specialty within managerial accounting, where you're actually focusing on the expenses itself of either a product or a service. And there's a number of different methods that you would use. Some of the common ones are like joint product costing. So sometimes you'll have a product that starts off as one thing, and you track the costs associated with developing that product up until a certain point. And then you might have some sort of some sort of benefit to splitting it off and producing it, further processing it into two different things. And then you kind of have to weigh out like what's the cost of if I further process this down the road and I make some sort of byproduct off of this, and what would my expected revenue be against that cost? Is it worth further processing this out? So one example is joint product costing. And then another was just job order costing. That's when you're tying costs directly to just a specific job that's being done. And then process costing, I think, is usually basically what you would think of when you think of costing an inventory. It's assigning costs to different stages of that inventory process and then dividing that out to some effect over the number of units that you're actually selling and things like that. You also have like activity-based costing, which is much more involved and gets very granular. And usually you're only really doing that in probably larger companies because it's also a very expensive process itself.
Why is it so expensive?
Just because it's so granular, it takes a little bit more, it takes a lot more manpower and time to
Okay.
identify all these little activities and costs around it, and then to track it is, and the softwares that you need to track all of those activities and cost drivers and all of that is typically fairly expensive.
Gotcha.
So what you need to maintain that system of costing is usually pretty expensive, and that's why it can get pretty costly.
So how do you balance the need to control costs then with the need to invest long term and grow into the innovation part of the company?
Yeah, I think that's a great question. There's constantly a tie between, that expense, having to like save on your expenses, and then also having to spend in order to make an investment and a return. And I think this is where really measuring out what your expected return is and having those discussions around those decisions that you're about to make really helps out in trying to make the best decision you can to invest going forward. And so I think having, tangible metrics on like what are we really trying to achieve, first of all. I think it's tempting for numbers people to go to the numbers and start there, but I think really where you should start is your strategy, and you should start, what am I trying to do? Because ultimately your money and your numbers and all of those things are just tools that you use to get there. So you have to know where you're going first so that you know where to aim it. So I would always say, like, you're trying to make a decision between expenses and investment and how you should be spending toward your investment. We'll start with where you're going first. And trying to figure out what you're trying to accomplish and what you're willing to do to get there. And then you start calculating some things out, like your return, your potential return, how long is your money going to be out there, your net present value on the project, your payback period, how fast you're going to get your money back, and you start calculating some of those items, and they start giving you a little bit more of a tangible way to think about what feels abstract as a strategy sometimes. You know where you're going, but your vision can be a little bit vague at times until you start putting some of those metrics around things to where you're like, oh, well, now I'm thinking about it in terms of outcomes. Well, this is where I want to go. But if I calculate some of these things, I can think, oh, well, this is a possibility. I wouldn't be willing to, go here, but I would be willing to go there, and I kind of think of it, this is a very basic, and I'm going to take it to a very basic personal example, but I find that, like, even on a personal side, when you're budgeting for something, if you don't know how much something costs and you're trying to budget for something, a lot of times people, in my experience, will kind of be like, oh, I don't even know how much I should be budgeting for this event or whatnot. Like, I don't even know how much I should set aside for that. But typically you have like a gut level on what something should be. So if you just throw out some like absurd number, like, oh, like, okay, you're saving for Christmas. You're not sure how much you want to spend on Christmas. Well, do you want to save like 5,000 for Christmas? And someone would have a gut level thing of like, oh no, I don't mean 5,000. Okay, well, let's say $10. Oh no, not $10. Oh, so you do have a range somewhere in between that you're thinking of. And I feel like in general, that is what happens. You're thinking about where you're wanting to go, what you're trying to do, and it feels a little abstract until you start to apply some of the numbers and metrics, and then it helps you begin to narrow down your boundaries and your limits that you're working within.
I
So I
totally
think
agree
when
with I totally agree and resonate with that too, because when I'm doing my budget, my wife does the same thing. It's like we'll be looking at, okay, so our expenses versus profit. We always undercut our profit because you never know exactly what your profit is going to be. So, we always undercut it substantially. And then our expenses, we always exaggerate. That way
mhm,
it's going to fall somewhere in this like safe zone and we're
yeah,
prepared. Is that the right way to do it?
yeah. I mean, and everybody's got their. It comes down to risk tolerance too, right? Like, what are you willing to risk? And that's kind of what you start to identify through that process. And you need to hedge where you need to hedge in order to manage your risk. And some of those things aren't defined until you walk through that process with somebody, and with a group of people. And sometimes people see more risk in the business than others on different teams. Someone sees more benefit, and you need to be able to hash out those discussions to really come back to, like, where are we actually willing to, what's the line we're willing to walk, and what risk do we really need to take, where are our benefits, and how do we get a balance in making that decision.
That's awesome. And I think it's pretty cool. This kind of off topic, but like as soon as we got into this topic, like you lit up a little bit more, and I can tell that the budgeting and forecasting side of what you do is really what you love about your part of the job. And I
It
know
is.
that because that kind of leads us into your own entrepreneurial journey that you're on right now, which is helping entrepreneurs, and correct me
Yes.
if I'm wrong here, but it's helping entrepreneurs learn to budget and forecast and risk management and all that stuff within their new up and coming companies.
Yes. Yes. So I mentioned I basically got my start working for a small business. So I have a very tender place in my heart for small business owners. And even going into accounting in general, I felt like that was something I've always wanted to bring full circle. So this is something I'm really passionate about, and wanting to build a community for small business owners to be able to get help with their budgeting and how they're making decisions and managing risk. I feel like there's a pretty big gap with, like, we have larger companies that are able to either hire in-house their CFOs and their FP&A teams and all that. And then you have other companies that are smaller that can hire at least a fractional CFO or something like that. But then you
Mhm.
have this other group where you're like in the in between, and you're just trying to figure out how are you going to make the finances work to actually get your business idea up and running. And I've seen a number of times where I have had personal relationships with people who've had great ideas and awesome like execution in so many ways, and they serve their people so well and they're very skilled, but they run into this wall with the finance and how they manage their money and how they actually tie that to what they're doing in their business to be more effective. And so yeah, that's my business. And so Strategic Money Coach, I'm starting to build that out and build a community where small service-based business owners will have access to me to kind of talk through some of those challenges and get support in getting some sort of budgeting system up and going, so they can begin to seek clarity and start to tackle some of the intimidation that comes around just dealing with your numbers and figures and things that feel like they never really look the way you want them to, because there's always some sort of give and take when you're making strategic decisions.
Oh, it's
So you're
horrible.
like, you wish that you always get the ideal, but you just never do. And I think a lot of us on a personal basis sometimes fight shame, feeling like we wish we were somewhere better. And then trying to like tackle some of that when running your own business on your own is hard. And I want to be able to offer support and some strategic solutions for people.
I, bro, it's so hard. And it's funny, I was actually a guest on a podcast last week, and he asked me, he's like, what's the hardest thing about being an entrepreneur? It's like, everything.
Yeah.
It's just every day is a different fire you have to put out. Every day you wake up and, oh, look, the code in my website broke for some reason. I didn't touch it. I didn't even look at it. Like nothing updated, nothing changed, but somehow this zero got moved and now my entire website is broken. And I got to
Oh my
figure out
God.
how to fix it. And you're just like, and that takes you like
Yes.
6 hours and your day's ruined. And you had to reschedule meetings and podcasts. And uh, if it sounds like this happened to me, it did. It took like 6 hours to fix. But
Oh God.
it's but uh one of our mutual friends, Shane Sams, says that the best day as an employed person is worse than the worst day as an entrepreneur.
Mhm.
So and that always kind of stuck with me, and it's absolutely true. I would rather be an entrepreneur and be my own boss and do what I want to do, serve who I want to serve, help who I want to help. You can't replace it. It doesn't matter how hard it gets. So all of that just to say, I totally understand what you're saying, because I'm right there. It's not an easy process, but it's definitely worth it. So one of my biggest things, especially whenever I started my company, was it was completely self-funded. And I'm not, Bill Gates or Donald Trump, and don't have just loads of money to throw at things. So being a self-funded, startup company was very hard. So what advice would you have for someone that is um like they want to hire someone like you, but they just don't feel like they're financially ready. So as far as like the best financial practices in creating an effective budget and helping them forecast, what advice would you give that person right here and now?
Yeah, I would say, especially if you're a service-based company, I would get onto some sort of flexible budgeting system. And the one I always recommend for small business owners is YNAB. So I would check out YNAB. When you first go to the website, it's like a personal budgeting software, which is that's how they started. But there are a lot of small business owners using it, and I myself have used it often, and I have helped others onboard with YNAB. Even if you haven't even had a bookkeeper yet, you don't have a bookkeeper yet, you're just trying to do like some sort of expense tracking, it's much better and more efficient than Excel. It's going to save you a lot more time. And it's got a lot of, it's great. You do want to, I should caveat that my bookkeeper statement, I'm thinking as my accountant, at some point you do need a bookkeeper. So do not try to replace YNAB, like use YNAB as a way to replace a bookkeeper. You get to a place where you can afford a bookkeeper, get one, because you need one for compliance, and it's going to increase the value of your business later on, having clear books that you can go back to. But if you don't have something and you can't afford something, start with YNAB, because you will have expense tracking that you can use to help prepare for taxes and things like that. I also like their method that they teach a lot. I'm actually a certified YNAB budget coach, and so I coach people on that a lot and try to make sure that they're understanding the method and how to apply it. They're very cash-based on working with what you have. I think we are often looking into the future, trying to forecast things, and we're making decisions based on what we think will happen when we really need to be making decisions based on the resources we actually have now. I think they have a balanced approach to debt management as well. And getting on something like YNAB will help you get past like a rigid budgeting system and get you into something flexible that you can make decisions with and change things around. So I think that's a really great, strong start for someone who's trying to get up and running. They don't feel like they can afford something and they need something to get going. Partner YNAB with Profit First. Profit First is also a money management system. Instead of a software, it's more of a method that you can use. Mike McCallowitz, I hope I say that right. Every time I say it, I'm like, okay, good.
At least that's how I say it too. So I if you're wrong, I'm wrong too. So take comfort.
Okay. Yeah, partnering Mike McCallowitz Profit First with YNAB is just awesome, because in Profit First, he recommends setting up like 5 different bank accounts, which is essentially trying to budget. You're trying to budget out, how much am I getting in my revenue? How much am I getting in my spending on operation costs? Or how much am I saving for taxes or actually getting in profit? You're setting it actually aside to see separation. But you can do all that within YNAB and make it so much easier to deal with. So taking the money management strategy, and instead of using all the different accounts, using YNAB as a software for budgeting those different groups out is really, really helpful and very flexible and dynamic. I feel like it gives a lot of clarity. So that's always my go-to for somebody who's starting out.
That is great advice. I love it. And so how do you ensure, or this person, how do they ensure that their budget and their forecasts are aligning with their overall business strategy?
I think what I would do first is get clarity on where your expenses are coming and going from. So you have to have a budget of some sort of thing to be tracking that. You also need to have some clarity around just your priorities of like what you have to have versus what you want to have, things like that. And then have your strategy in mind and actually written down and outlined. I think it's really common to not have like your mission and your vision and values and stuff as a small business owner. You like have it all in your head and you don't always have it written down and outlined. You're like, I feel it and I know it and this is where I'm going, but you haven't like actually tangibly written it down. And there's something about like writing something down and going back to it and those key like disruptive moments where you're making big decisions. going back to home base and having it written down is really helpful. So I think having it written down, having a place where you're going back to it and looking at that as your first roadmap before you're looking at your numbers and your budget is really helpful. But then when you are looking at your numbers and your budget and what you have available as resources, having a clear picture is really helpful. So I think the two obstacles are getting past the sense of it being vague, whether it's your vision being vague or your numbers and your clarity on your resources being vague. You need to have clarity in both areas to be able to join the two together. And in a tactical sense, once you have clarity, you're able to look and see like, okay, I have been spending money in this area, and this is why I feel like I'm going down the wrong road. I want something else to happen. And so I need to actually move my money from this area to this other area in my business, this other service in my business, so that I can start investing in this area. Having clarity on both of those areas or strategy and your budget will help you start to like whittle down how you're actually making your money move your strategy forward.
Fantastic advice. And when you said that, I don't know if you saw I'm like, because I am that entrepreneur. It's all right here in the brain bucket. I do not have it tangibly written down. And it's funny too, because I'm sure you've heard me in some of the meetings we've been in together, preach and preach and preach. Write it down, write down your goals, journal, like write everything down. Right? Because like you said, it's the brain to hand to brain, that communication is irreplaceable in my opinion. And
Yeah.
so but that is, I am guilty. I have not written down a mission statement. I have not written down any core values, any of that stuff. So I'll add it to my to-do list. Fine, you win.
Well, sometimes I find myself even looking at the people around me because they hear me talking about my vision and what I want to do. And so sometimes I use them as leverage too. So having it written down, but even just using other people that are intimately acquainted with what you're doing, what you're trying to accomplish, bouncing things off of them is really helpful. Because you think of these larger companies that I've kind of been talking about, like they have entire teams of people coming together to have these discussions. And the challenge of a small business owner is like, it's just you and maybe like whoever you're working with is a couple people and you're trying to move something forward. So you need that interaction too. And that does help. If you haven't written it down, if you have other people at least involved in what you're doing too, that helps you kind of move things forward as well. So integrating all of those things, I think, helps.
I agree with that 100%. The best decision I made in this process, and is probably going to be the best decision I ever made, was that when I decided to not do it alone. Just find a group, whether it's a mastermind, you hire somebody. If speaking to the would-be entrepreneurs, or if you just started your company, or if you've had your company for a couple of years, if you do not have a group of people that you can talk to on a regular basis, like Colleen and I do, then you've got to find that group. It's invaluable. Like you can't even put a price tag on it. I paid for my group, one of my groups, I paid $20,000. But that group, in all honesty, that group's probably worth $20 million. Like it's just, there's not a price tag that you could really put on it, because you go to them with, like you said, like, hey, this is what I'm thinking. And then they're like, they start asking questions because they're not clear. In your head, it's clear, but in your speech, it's not clear. So they start asking questions, and all of a sudden you're like, oh, wait a minute, that makes sense. Like your vision wasn't as clear as you thought it was.
Yeah.
And then like, it's just refining and everything's getting better. So that is great advice, Colleen. Great advice. Find you a group of people. You have to, even if they're strangers. I joined a mastermind, complete strangers. They heard me speak and invited me. And so I joined, and it was like, man, these dudes are brutal. Like, it's all men, but they tell the truth and they don't hold back. And it's like, but it's been so valuable to me, and I couldn't replace it. Anyway, moving on. I'm sorry, I digress.
No, that's great. I just to add to that point a little bit, I was talking about how numbers can be like a way to find your boundaries. Well, doing something like that with other people is also a way to find that. That's why those discussions are so important. People are just going to see things that you don't see, and you need that feedback to make good, strong decisions.
Absolutely. Thank you for that caveat, because you're absolutely right. So keeping on with the trend of small businesses, then COVID hitting in 2020 was just devastating for so many small businesses. Why? I mean, besides the obvious of why it was so detrimental, do you have any insights into what those small businesses did wrong, or something they could have done in preparation for something like COVID? Because I mean, let's be honest, it more than likely eventually will happen again, hopefully not in our lifetime, but how can small businesses prepare for something like that? Is there a way?
I think it's a really challenging question to ask, because I think, or to answer rather, because I think a lot of that comes down to, one, like your industry that you're in. I'm sure everybody has some sort of slightly different challenge that they faced based on the industry or what their customer base looked like and things like that. But broadly, whatever you typically, it's not too much different. A business's finances, sometimes, you get all these complexities, but it really, when crisis hits, it just kind of boils down to like, are you financially secure enough to weather the storm? And whether your customers are not coming in or you're not selling things, like, are you sustainable enough financially to weather it? And even larger businesses are not necessarily, just because they're larger and have all these teams and stuff, they're not necessarily as, we talk about banking crisis and things like this, these huge
Right.
institutions, they can fail suddenly without anybody knowing what's going to happen. And it's suddenly this huge thing. And that typically has to do with some sort of like over leveraging, like some sort of thing where it's like, you think about your personal finances, you lose your income stream or you lose something going on. You want like 3 to 6 months of expenses. Like businesses need a business cycle worth of expenses on hand to handle crises. And I think it's human nature in general, when things are going well, to overextend yourself a bit, because your risk tolerance is a little higher and you feel a little more confident. But I typically tell, especially small business owners, because there's a little more of an intimate tie, right, between your business doing well and your personal life and your personal finances doing well,
Right.
that you need more of a margin, right? Like you need a bigger margin of like your personal finances have to be doing well, but business has to have that same margin. It has to have like a business cycle. You have to have that. You have to distance yourself between the time the crisis hits and the time you actually have to respond. And usually the way you distance yourself is building some sort of financial buffer, not over leveraging something, having something in savings, some working capital going on your budget, so you have it set aside so you can respond. You have time to respond and figure out what to do. So yeah, it's hard to tell exactly what everybody's weaknesses are in a time like that. I'm sure other people, depending on what your business and your expertise is in, there's probably different strains and stress points that caused, or was like the camel on the straw on the camel's back kind of thing. But typically, you just need some financial stability, and building that in as a small business owner takes a little bit more finesse and discipline, I think.
Yeah, no, you actually answered that exactly how I wanted you to, because you mentioned leveraging, uh financial leveraging earlier. And I hope you don't mind to talk about this. I don't think you will. But you are, like me, a Christian, and
Yeah.
Christians are often taught that borrowing money is evil. It's bad.
Yeah.
And I believed that for a very long time. And to this day, it's still hard for me to borrow money. But in order to start my business, I had no choice, because again, I'm not Bill Gates. I don't have just oodles of money just to throw at things.
Right.
So, how would you define, I guess, I hate to say it this way, but good debt versus bad debt.
Yeah, I'd say, well, bad debt in general, I think is consumer debt as a broad definition. Um, if you're operating your business off of consumer debt and you're floating your expenses from month to month and you can't pay off your credit card and your current month's expenses, you're floating expenses on your credit card, and that's you're slowly but surely going to end up in some sort of consumer debt if you're starting in that process. And that is a dangerous place to be because you want to be able to pay for your expenses every month. Just bottom line, you want to be able to afford your expenses, and you don't want to be dependent on someone else to pay that, right? You can use credit cards and things like that as tools, but you've got to know what you're doing with your budget to make sure you're actually paying them off and not floating them and things like that. And I'd say as far as like business loans go, I'd say, you know, you want to be able to take out a loan to start a business and leverage the assets that you do have and challenge your frame of mind sometimes when you have skills and resources and things that people need. You want to be able to challenge your risk your risk tolerance to be able to take out loans and see it as an investment rather than an expense, because it will have a return. But I would say what really makes the difference in that case is being able to measure what your return is and have that full discussion, and not just like doing it, but like doing it with purpose, because debt is a tool. And I've commonly said, and I know this is actually a fairly common statement, although I haven't heard it very often, but that, you know, debt is a tool, obviously, but it's more like a chainsaw than a hammer is how I would describe it. So it's great if you're going to chop down a tree, you need it. You don't want to use a little handsaw trying to cut off some branch on a tree, right? But it is a chainsaw. You want it directed at the tree, not your limbs. And you can really injure yourself, right? Like getting into it. So you take out a business loan and you are if you just take out a business loan without doing some sort of accounting for like, what's your return? How long is my money going to be out? Can I afford this monthly payment? What am I saying no to by saying yes to this? And for how long am I saying no to that by saying yes to this? You got to take all those things into account, right? We're talking about strategic decision making. That's, you know, you need to get those parameters around things. Things may sound like a good idea, but you need to get those parameters. And if those line up and you're willing to take the risk and you say, yes, this is a good thing, well, then do it, you know? You're not going to have everything lined up, but it's good debt in that case. You've done your due diligence. It will be good debt, and you know what it takes to make it work. That's good debt, and it's going to return for you. Yeah, so that's how I would kind of say good debt versus bad debt. Consumer debt, use credit cards as tools to pay for things and whatnot, but don't get on the float. Don't be holding consumer debt. And you taking out loans, make sure that you're actually measuring and leveraging things. You're not over leveraging yourself. That's what those boundaries are for. So break even points, return on investment, calculate what those are, figure out how much your monthly payment's going to be on something, whether you can afford it and you want to be, and how long it's going to be, like you want to be in that position for that amount of time.
So the first time I heard you talk about it, that's something that really confused me, was a break even point. Can you go into a little deeper on the break even point?
Yeah, so break even point, this is like a formula you could Google, just a break even point. And really what it's doing is it's looking at your fixed costs and your variable costs in conjunction with like what you're selling and how much you're actually going to take in revenue. And the goal is to know at what point, how many units or things do I have to sell, or clients do I have to take on in order to overcome my fixed costs? Because you're always going to have your variable costs. As the more you sell products, the more you have services, you're going to increase variable costs. Variable cost is any cost you incur every time you sell something. So it varies based on the units of sales, right? The fixed cost is like your overhead, like how much does it take to keep on the lights and keep your services and your website up and going and all of those things. You're going to pay that no matter whether you have clients or not. These are the services you have to pay to have your business up and running. And you want to know at what point does your revenue from clients and products and services, all your sales, at what point does your sales going to cross that fixed cost line? That's your break-even point. Because beyond that point, you'll begin to earn a profit. and you'll begin to be able to understand a little bit more about, you'll be able to earn a profit after that piece. And that's so, and I guess I want to distinguish a little bit about break even is not the point you're aiming for. You want a profit. You want your point you're aiming for is above the break even point. The purpose in calculating the break even point is just knowing like where your limits are, right? So if you put the loan in, right, you're like, this is the cost. I'm gonna have to pay this monthly cost on this loan. That's part of your fixed cost now. So it's increasing your fixed costs, which technically every time the higher your fixed costs are, the further away your break-even point, so that increases your risk a little bit, right? Are you willing to allow that increase in risk based on how fast you think you can make a return on something? And if you are, then that's great. But knowing at what point, like I need 500 clients before I break it even. I need to sell X amount of products before I break even. And I need to do this within a year. Am I willing to, do I think I can get those 500 clients this year when I take out that loan? Does that seem realistic? Do I have the resources to get those clients? That kind of thing, that helps you understand, okay, well, then maybe I don't want to take that loan because I don't think I can do that within a year. It might take me 2 years to get that amount of clients increased. So like that kind of thing, it begins to just change the dynamic of your discussion a little bit in your head on how you're measuring this out. But yeah, so that's what break even is. It's how much sales basically you need in order to pass your fixed costs.
So it sounds like a profit. It sounds like to me the break even is that needs to be one of the key tools you're implementing into your overall strategy, overall financial strategy into your business. Is that correct?
Yeah, I'd say as a small business owner, looking at break even on the projects that you're doing and your return on investment. Those are two really key ones to keep in mind. Those are two really important aspects that just kind of help give a little definition around things.
That is awesome. And, if you don't know how to, or you don't want to do it yourself, you help with those things, correct?
I do. Yeah. And the community that I am starting is a place where you can get support in doing that too. So it's something I can teach on, and you could be doing it on your own, or just coming and getting help doing, or you could actually hire me to work on a particular project that you just need someone who knows how to do it to just help you get to the point to make the information you need together to make the decision you need to.
But I'm sorry, I want to interrupt you here. The most important takeaway, I think, and correct me if I'm wrong here, is that you're teaching the entire time. Even if they hire you just to do it, your goal is to teach them ultimately how they can at least better understand it and do it for themselves if they have to. Is that correct?
Yeah, I think really most of these decisions a small business owner can make. It just takes like on their own. They just need a couple tools, like understanding how to use the break even or how to apply a return on investment formula and how to gather the pieces that they need for that formula. Like this isn't rocket science, and it's like I'm not even a numbers person. Like I was almost a ballroom dance instructor and like all these other things. I love storytelling and like literature and like all these other creative things. So like this is not rocket science, and whatever accountant that makes you feel like that is just nuts. It's not. Finance people in general, I feel like, try to get very high and lofty about stuff, but as a small business owner, these are things that you can do, and these are very basic, easy tools that you can learn to employ. So most of these decisions you can make on your own as a small business owner to start better getting clarity on how you're making decisions, and get a little more strategic about how you're making them, and maybe a little more comfort too, because you feel like you thought through it a little bit more and you know a little bit more of the tangible aspects of the outcome, right? And then sometimes you will run into a place where it's like there's more than just a couple things that you're trying to play out. Like you have your break even and your return on investment, but you're wanting to expand and you want to take on another loan, and there's a couple other things going on, and you need a little bit more insight into like what that looks like. At that point, when you feel like you need help, that's something else that I can do to help you with project-based decision making. You need something a little bit more expensive. Well, then I can come in and help support you to make that decision. And the community, my hope is that my community would be something that helps these small business owners on an ongoing basis where they're checking in and making their own decisions and getting instruction on how to, stay on track and connect their money to their long-term business strategy. But then when those bigger decisions come in and they feel like they need backup, I'm there as a resource that they could hire separately to work on that one project.
And most importantly of all, it's like what we just talked about. You're not going at it alone, right? You have
Yes.
a group of like-minded individuals around you, plus you, that are just there to bounce ideas off of, strategies, everything, communicate, and just have someone in your corner. I can't stress how important that is. Just to have that, a group of people in your corner is so important.
Yes. And to ask questions too, where you feel like I can't tell you how many times there's been places where like I've started a job or I'm in this situation where I'm like, I just feel like this is a dumb question, but I have to ask something. And I don't know exactly who to ask it to, because some people respond better and are kinder when you ask questions than others, and I try to find out, people I can ask questions to. I'm like, I got to ask this question. And I'm trying to appear like I know what I'm doing while asking this question. And that's a very hard dynamic to uphold, And so finding a safe place to ask those questions, I think is really important. So having, that community where you can just be yourself and be like, these are my strengths and my weaknesses, and this is where I'm at, and I need help, and I need someone to appreciate where I'm at and help me get to the next place.
I love it. I love it. And your community's not live yet, correct?
Not yet, but it will be hopefully in the coming months. So if you're interested and you want to check out my website, it's strategicmoneycoach.com, and you can sign up on my email list and you'll get updates on when I'll be going live.
Awesome. And plus you're also on the socials as well?
Yeah, I've got a LinkedIn page and a Facebook page as well. I'm also building those up, but you can go in and like me. And then once I start actually getting content on there, you'll be able to follow what I'm doing, which will hopefully actually be within this month in April and May.
Awesome. And that just Colleen Lucero?
Yes.
Awesome.
On the Facebook page?
Mm-hmm.
Strategic Money Coach for
Strategic
LinkedIn
Money Coach.
and Facebook. Yep.
Okay. And I will have links to all your socials and your website and everything. That is fantastic, Colleen. Thank you so much for coming and just dumping all this. I almost have a headache because it's so much information. All is like fire hose of information, but it's good information. And especially if you're an entrepreneur, it is information you have to have. And Colleen is an amazing person. And she has the heart of a teacher, and more importantly, she leads with service. So that, that servant leadership is the most important thing in the world. So I highly recommend you go check her out, you follow her, and if you need her services, I couldn't recommend anyone better. So Colleen, you get the pleasure. I do this to everybody, so you don't feel like I just blindsided or just you. Everybody gets. Give me one final piece of wisdom that you would tell someone on how they can lead like a champion.
How they can lead like a champion. Well, I'd say, what comes to my mind is I'm always, I love the Lord, and I always think about how the Bible talks about, Christ being like a bridegroom, rejoicing to run his course. He's like a champion, rejoicing to run his course. And I think of the sun coming up every morning and how it's like a champion rejoicing to run its course every day. And I think leading like a champion is much like that. There's a sense of being diligent and consistent and relentless in whatever you're doing and not giving up and knowing who you're standing on, who you are. Who you are is always going to determine what you do. So if you're wanting to lead like a champion, you need to know who you are, and you need to know who you're standing with to be able to show up consistently like that on a daily basis.
That's probably one of the best answers I've ever gotten. I love that.
Oh,
that is awesome. All right. She is Colleen Lucero. Am I saying it right finally? Lucero?
You are, yeah.
Okay,
Yep,
finally.
you got it.
Finally, it took some practice. I've been practicing that all morning, actually. Her name is Colleen Lucero. Her website is, say it,
strategicmoneycoach.com.
strategicmoneycoach.com. Obviously, her all her links to her website, social will be in the show notes, so go check her out. And of course, go check me out, renownedleadership.com, and make sure you follow, like, and subscribe to me. And I will see y'all next week. Thank you so much for joining us. And remember, lead like a champion. There you go again. All right, my friends, that wraps up this week's episode. Thank you so much for tuning into the Renowned Leadership Podcast. And if you're looking for more valuable resources, head over to renownedleadership.com. We have tons of free resources for you. Just click on the free resources tab at the top. Also, while you're doing that, head over to YouTube, check out our YouTube channel or all our other social medias. Just search for Renowned Leadership or search for me by name, Stephen Morris. Make sure you like, follow, subscribe, whatever the case may be. Leave us a comment. We value your support and we greatly appreciate it. Also, we're offering all our listeners a complimentary coaching call. We just want to show you really the power of Renowned's coaching. So head over to the website. In the top right-hand corner of the screen, you're going to see book a call. Click that button and go ahead and schedule your complimentary coaching call today. I hope you enjoyed hearing Colleen share her valuable insights on the importance of financial stability for small businesses, making strategic decisions based on your resources, and the significance of understanding cost measurement in managerial accounting. She also emphasized the need for community and support when making important business decisions. We hope you found Colleen's advice helpful and informative. Don't forget to check out her upcoming community for small businesses, and we're going to have links for her and all her socials and all her stuff in the show notes and on the website. And any place you can find this podcast, you're going to find links for Colleen. Make sure you show her tons of love and support. Thank you so much again, everybody, for listening to this week's episode. And make sure you tune in next week for more inspiring conversation on leadership and success. And don't forget, everybody, lead like a champion. Oh, no one does it better.